recording until now, so we're only going to get a very short recorded session. I apologize. Yeah, it's always the same. It's the young couple who's sitting in a hammock on a desert island with a laptop and a drink with an umbrella in it, making money. Well, that's nonsense. It doesn't work that way. Don't believe that. You got to. It's a business like any other business. You got to put your time in. You have to do your homework. You have to learn how to learn the business. But having said all that, okay, yeah, I think this is a fairly good time to buy into those banks if you like bank stock. And this is a good time traditionally to buy banks. When the interest rate rises, their spread, you'll hear that term in the media often, the spread goes up. So now it's hard for them to make money in the traditional way. They take my deposits, they pay me next to nothing. They loan it out to you who are borrowing the money for also nearly next to nothing. Where's the profit? There ain't much. So you see them then go into mergers and acquisition and wealth management and all sorts of other sideline businesses that they can try to make a buck at until interest rates recover. Well, they're recovering now. So when interest rates rise, and they do have to pay you a little more on your deposits, but then they charge a lot more for the loans, and that spread is their profit margin. So the interest rate spread, which is what the commentary ad is always referring to, refers to that phenomenon. So Meta, aka Facebook, not looking so good. This fall, by the way, is on, not this is fairly precipitous. That may be, this is what, a weekly chart. Keep in mind, Mrs. Sandberg just left the other day. She was the brains behind Paw. Zuckerberg, the founder, was a hacker. She was a professional manager. She turned it into a cute, adorable social network phenomena to an advertising juggernaut. She's leaving. Draw your own conclusion. What if Facebook goes lower in the next few weeks? Asked Borislav. Is that still possible? Oh yeah. Oh yeah. I think, and again, I emphasize that this is my opinion, and I could be wrong. Facebook is one of the reasons when a company changes its name, it's not so they can sound more hip. It's because they're dodging problems. So they changed their name from Facebook because they were under a lot of scrutiny to Meta, trying to throw sand in the eyes of people who are looking to rein them in. And believe me, there are a lot of people looking to rein them in. As I mentioned earlier, the boss there is an arrogant son of a bitch. And the profits that they extract from selling information that truly belongs to us is outrageous. I believe that they will either be forced to alter their business strategy entirely, or at least give back some of their profits to the people from whom they make it. So if I am looking for the shoes, so to speak, and all of a sudden I'm being advertised everywhere I go on the internet by that shoe company, and finally I break down and buy the shoes, I should get some of that money back, either the advertising revenue that they made from the shoe, paying them to advertise to me, or in reduced price of the shoes, something. So that's going, whatever it works out to be, whether it's that or just much more stringent sort of ham-fisted regulation, their profit margins are not going to remain as fat as they are now. I'm sure of that. So that's Meta. Let's take a look at Amazon, another proto-neo monopolist that's squeezing the life out of everybody else in the marketplace. And by the way, there's good reason. Amazon might be in retail. Yeah. Let me check retail. But they're not only retail. That's why they might have been in technology as well, because they also dominate. By the way, they dominate cloud computing. It's Alibaba, Macy's. Where's Amazon? Tesco. Well, I guess there's a better way to do it than looking here. Let's leave the MT4 platform for a moment and go here. This is the trading view chart, and this is really my preferred charting program anyway. AMZ, AMZN. There we go. You know what? I don't have any data here. What's going on? That's strange. Something's wrong with the chart, obviously. Try this. Sorry, ladies and gentlemen. Give me 1 minute. I'll bring Amazon up in a second. Here we go. Okay, so this is Amazon. This is a daily chart. Let's bring it. Let's magnify it a little bit. Weekly. Amazon's doing pretty. Here's I can just tell by the pattern. No, wrong. Where's the 20? Here's the 2020 dip. Pretty minor, because they recovered handsomely from the thing. Way surpassed. Here's where they were at the beginning of the pandemic. Here's where they were. And so even today, they're 35, 30% above where they were when the pandemic broke out. They're raking it in. They're just raking it in. So on very high volume, I might add. That's certainly above average volume. Although they had it in the last couple of weeks, they've all fallen off again because the recession is becoming clear because banks around the world are making it clear that they're going to raise interest rates. So there's temporary fallout. But I do want to say this, and this goes to Borislav's question, Joe's, and Oki's question. These fall-offs that we see here are just the beginning. Remember, this is a long bull run in one of the most unexpected and robust recoveries in economic history. It's not going to repeat, and in fact it's just in the early innings. It's going to get much worse. Interest rates are going to go up much higher. They're going to stay high for a while until inflation falls back. Inflation is not going to fall back because China, the manufacturing engine of the world, is fooling around with their zero tolerance nonsense policy, and therefore shutting down places like Shanghai, city of 25 million people that produces God knows how much of the world's goods, locked down, house arrest. This isn't, well, you hear a story, oh, well, they're sleeping at the plant. Forget that. They're locked prisoners in their home. If you take a look at a Google Earth satellite photo of Shanghai, you'll see the last time I looked, which was a couple of days ago, over 250 vessels just anchored. 250. Each one of these vessels can hold some, probably on average, something like 15,000 containers. You tell me if you think prices are going to be falling off, or demand is going to be strong in that phase. It ain't. I think there's a long way to go in this. This is just and here I'm looking at the chart. I'm looking. I guess I can show it to you. See if I can pull it up. Well, I'm not going to. It's too complicated. But today's market closes all red. All red. Another one of these days. And let me show it to you. It might be worth just making the effort here, because this is another important tool I like to use. See if I can bring it over. Yeah, maybe I just open it up here. It seems have a look at this. This is today's close. This is a very useful little device. Just with a quick glance at something and get a sense of what's happening. Look at this. This is today's close on the S&P 500. I give you all the world markets as well. How do you like that? Okay. When we started off today, most of this was green. Right? By the close today, it's all not only red, it's deeply in the red. Keep in mind, most of these stocks move in fractions of a percentage point. Today they moved in 4.5, 4%, 3.6%. These are the giants. You tell me, gentlemen, whether you think this is the time to buy. This, ladies and gentlemen, in this humble trader's opinion, is a time to sell. It's not a time to be buying. So, well, that's about as far as I want to take it tonight. I hope you get the idea. I hope those of you who are asking, a couple of you guys, the session is only partially recorded. I made an error there, and I only started recording a little hot, probably 15, 20 minutes. So I apologize for that. But there's a ton of videos available on our site. And that brings me to uh, address the people who are not members, not clients in the house, who are just attending here as guests, and maybe perhaps to open an online trading account. Please consider joining us. Please consider opening an account with Alvexo. We're straightforward, honest, stand-up brokers that do the best we can for our clients. And this is an example of that effort. No, we don't make money all the time. No, I'm not right all the time. I lose money like everybody else. But the sine qua non of success in this business is making more money than you lose. And lose you will. But if you make more money than you lose, then you're a success. That's all there is to it. That's why it's such an appealing business. That's all you have to do to be successful. You have to make more than you lose. And but I say that in order to make you aware that, yeah, we lose. Nobody that's successful in this business doesn't lose. I'll even expand that further. Thank you, Alicia. Thank you for that generous compliment. I appreciate it very much. Um, I'm a U.S. resident. I don't think I can open an account. That may be true. That may be true, although there are ways around that as well. My pleasure, Oki. Check into it. I think you can, because I know we have U.S. clients. We're going to say. Oh yes. So yes, and I believe that's true also for any endeavor. Athletes, musicians, artists, teachers, anybody who's successful has to know how to lose, has to know defeat, has to know failure. Nobody only succeeds. That's nonsense. So just like this business, just like any other business, I should say, you have to learn how to lose, and lose you will if you're going to be successful. But you can be successful. Make no mistake about it. If, by the way, you're here just for a good time, to learn a little bit, to have some fun, to place a position for excitement, by all means, we welcome that as well. I don't want to discourage that or belittle or denigrate that. That's more than respectable. Nothing wrong with that either. So, ladies and gentlemen, if there are no more questions, let me say that our next session is a week from tonight, same time. What they used to say when I was young, when they were broadcasting Batman, the TV broadcasting. Tune in next week, same time, same station. Well, why say that anymore? Everything's on demand, but that's the same time, same station. We're going to talk about the perfect storm in the current equities retreat. So it's a sort of follow on to tonight, and we'll go into the equities pattern. We'll take a look at more charts, and we'll examine more where we think equities are likely to go in the current environment. So that's next week, 2000 GMT, the perfect storm, equities and retreat. So, ladies and gentlemen, I'm going to thank you very much. Thank you all for your comments and your compliments. I always appreciate them. On behalf of the staff and the management here at Alvexo, I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now. My pleasure, Osman. Thank you. Thank you all. Bye, Borislav. Thank you for your comments. Bye, Ian. Good to have you in the room tonight.